The Central Bank of Kenya is seeking to tighten the interbank lending rates. That is the rate at which commercial banks lend or borrow from each other short term. It is moving in to actually set the lower and the upper limit. And the result of this should be actually bringing down the rates at which banks lend to the people out there. But we'll be delving into that and more of these stories in our subsequent shows. It is Money and Markets. Welcome to the show. Financial literacy is still a challenge in this country. It's not only a problem to people in the informal setups, or what others prefer to call the informal sector, but also those that you would actually define as corporates or elites for that matter. Now, in this segment, we pick the mind of the head of the Banking Institute to find out what they are doing to bridge these gaps and the expected outcomes.
The Uganda Institute of Banking, as you know it, has got two mandates. One is to professionalize the providers of financial services, and the other is to promote financial inclusion. And that necessarily means it's educating the public about financial literacy, financial education, the services and products that are provided by the banks, but at the same time also be a liaison, sort of link them. Because once they know the different products and services, they also know where to go, be it banking, be it insurance, be it retirement benefits, all these things. So that's our role. The ways we are contributing to these better relationships is through our banking and financial services awareness campaign. Previously, we did this online, especially in COVID, when we actually launched it and felt that there was a need for the public to know more, to get empowered, to get acquainted, to get skills in issues of financial literacy. At that point, it was virtual. We got banks in to communicate to the public, and the public was also able to communicate back and have a conversation, ask questions and be answered too. Eventually, we have evolved that to also include a physical presence. So we have been going around with the banks that we work with. We go around to different schools, different markets, different workspaces, and people are able to communicate one-on-one to understand what available products or services that relate to their needs, suggest some of those, because some maybe have gaps that they are not exactly responding to those needs. But also for schools, we've been amazed at how many school children would, for instance, like to open up accounts even before the age of 18. And therefore that is sending the industry into thinking and saying, how do we do this? So that there is the linkage. I would like that the level of appreciation of banking services does increase, but as you know, for now it's a challenge. I think you've heard it's a very small proportion of the population that saves with banks, for instance, about 11%. Majority saving in informal approaches or informal methodologies, but we know that that is also growing. It was not 11% before, it's growing. When you talk about people who borrow, for instance, borrowing in the banking is actually much more affordable. It's much cheaper than elsewhere, but that's just about 4%. The majority borrow elsewhere very, very expensively. So the programs we are running out, I've told you about the Banking and Financial Services Awareness Month, where we talk to the public. We are now going to work with the Financial Literacy Association. Yes, we've got a curriculum that is designed by the Bank of Uganda, but now we want to go into certification. Eventually, we want to be sure that when people go out as literacy trainers or financial literacy trainers, they actually have got a certification. But overall, we would like to also go out. As I said, the Awareness Month is broad, but now we want to go to do face-to-face at the workplaces and all this, and see even if we have more champions in these different areas who are certified to do the training, so that we have, people are closer, maybe call them ambassadors, are closer to the source of information.
The coming financial budget has had a lively debate around it. There are those that are supporting the proposals and those that have expressed reservations about the new proposals in the budget. Now, in this segment, we pick the minds of the framers of this budget to find out where they're coming from and the aspirations of the 2024-2025 financial budget. As the country prepares for the 2024-2025 financial budget, government this time is prioritizing citizen engagement as it seeks to speak to the needs of the taxpayers.
We need also to obtain feedback from the citizens. What do you think about this budget? So that we can inform future budgets and policies. The budget shouldn't be a ritual. It should be a dynamic initiative where the citizens must contribute. Where you see that we need to change something, now the budget month is the opportunity to give us that feedback.
This follows months of lively debates and engagement between the country's revenue collection agency, Uganda Revenue Authority, and some taxpayers, mainly traders, over the rolling out of the electronic fiscal receipting and invoicing solution. Besides questions about the solution itself, there has been more questions raised about how tax money is utilized.
To account to the people of Uganda about our earlier commitments, government is going to ensure that all of those promises and commitments government made in the past budget are accounted for. This is what we've done. We promised this is what we've done. That's the only way we are going to have John to go and collect tax when the people of Uganda know where their tax is going. And I want to tell you, we shall account for every penny because we have the numbers and also the results on the ground.
At 72 trillion shillings, next financial year's budget is the biggest that Uganda has ever had and comes at a time when Uganda's economic recovery after COVID slowed down, according to the Bank of Uganda April policy statement. This it mainly attributes to heightened government borrowing, shilling depreciation, and external factors like the dampened state of the global economy.